Alrighty, this is Wealth Wednesdays, episode number 5. It's not really an episode because it's not really a show, but this is session number 5. We don't have a presentation lined up for you today, but I think today is going to be cool. We're going to be doing a bunch of market review, and we're going to just talk about some current events. I know Matt, Dimitrios, you guys have been abreast of some interesting political and economical I don't know, call it movements or changes or news. So let's get into it. I think let's just start with the market. Let's start with the market because I think that's what everyone's talking about right now with rate hikes and is the Fed doing enough? Like, should they be raising rates faster and harder and what's going on, right? So generally speaking, the market does not appreciate that type of uncertainty. Okay. And, here we have the S&P 500, which I think is the best measurement for North American stock market. We have the S&P 500 about 20% off the highs, right? So we topped out in the beginning of January 2022. And it looks like we've done like a measured move. Yeah, it looks like we've done a measured move from the top at the beginning of January. We came down, we corrected, right? Hopefully people didn't go all into the stock market at that point. A lot of people got faked out and then the move back down. And since we've done this kind of symmetrical move down, it looks like the buyers have stepped into the market right here. So I guess the question I would have is this it? Have we done a correction in the S&P 500? And now it's time to go back up to new highs, right? Or is this here just a temporary bottom? We may go a little bit higher, but then ultimately just for one more leg down. And I think that's what makes a tough market, and that's where the uncertainty is, right? So you have people buying the dip, and then their stocks aren't really going anywhere, and then the stocks are just going lower, and then people are buying the dip again, stocks are going lower. So I think with these rate hikes still kind of on the table and the uncertainty with war and whatnot, and the price of commodities and inflation, I think the likelihood is that we probably have more to go on the downside for the stock market. And, like if I'm looking at a chart, like a place where I think this could potentially bottom out, like I'm thinking at around 350, which is 3,500 on the S&P. Okay. Now that's a big move. Okay. That would be it's about a 26% correction from the highs. Okay. And, if you look at your COVID low, this is the COVID low right here, March 2020. If I use this Fibonacci tool, right, about a 38% retracement takes us to that 350 zone. And a 38% retracement is a typical retracement, meaning that's typically the amount that markets retrace if they are in a bullish trend before they start to head higher. Okay. Now, it doesn't mean that this is going to happen. I just think that's what's most likely to happen. It's very possible that this is the bottom right here. We could easily in the next couple of weeks get some news. Maybe inflation is softening. Maybe the price of commodities have come down for whatever reason. Maybe peace talks between Ukraine and Russia. Maybe the Fed says, hey, we can't really raise interest rates anymore. We could definitely have bottomed here at a 23% retracement, and then we can head higher. Okay. I wouldn't bet the farm on that outcome. Okay. But I think it's good to understand the possibilities. Okay. Because at least when you understand the possibilities, you're not surprised when the move happens. Okay. The funny thing is a move back down to 350 is pretty much where we were before the pandemic started. Okay. So Here you got pre-pandemic, right? So that's the market at all-time highs, essentially. Market at all-time highs, the COVID crash, and then the recovery. A move down to 38% would just take us back to 2019. Right? So giving back 3 years worth of gains in the stock market. And a move to 350, if you really zoom out, I'll zoom out for you so you can see. Right? A move to 350 is really just a move back down to the 200 period moving average. Okay. Now, in my opinion, I think the average price is more important than any price given on a particular day. Okay. So if I see that the 200 period moving average is around here at 350, if I'm a buyer, wouldn't I want to buy closer to the moving average than farther away from the moving average? If I'm a buyer, you do, right? Because the way you would calculate is like you're saying you're getting a better deal if you're buying at the average price going back 200 weeks. Okay.
Yeah.
So I'm on the weekly time frame. Okay. And I'm on the weekly time frame. It says 1 week. And what this black line is representing at each point is it's just measuring the 200 weeks going back and then plotting the average price. And that's how you get your line. Okay. So the average price for the past 200 weeks is about 350. And it's beautiful because 350 coincides with a 38% retracement on the Fibonacci. Okay. So that's why I don't think we bottomed yet. We could have bottomed. I just don't think it's yet. What I would expect here is I would draw a channel. So I would just draw a channel through price like this. Okay. And what I would be expecting is I would be expecting a move up to the top of the channel and then the move down. Right? So you got the move up. People think maybe the bull market is restarted. The bear market's over. We go back to the 200 period moving average on the 4-hour time frame. So see 4 hours now. So this is the average price going back 200 periods on the 4-hour. So 4 hours times 200 bars or 4-hour periods. And then that's how we're getting a price of 439. Okay. So move back up to the 4-hour 200 period moving average, kind of aligned with the top of the channel, right? See how these things kind of are like coinciding with each other? And I would expect probably a move lower at that point, okay? That's the S&P 500. So if you're an advisor, you're talking to a client, they're thinking about investing. As we've been saying, actually, we've been like, since we started, even before, like in 2021, okay, in the summer, our advice has been you should be dollar cost averaging if you have clients looking to invest. Okay. And the reason why you should be dollar cost averaging is because when you are susceptible to big moves down, the last thing you want to do is go all in at the top. Last thing you want to do is go all in at the top, all in at the top, all in at the top. Okay. Ideally, you want to ease your way in. If you think the market's toppy, but you still want exposure, ease your way in. So then one of these drops don't kill your account. You didn't go all in here. You dollar cost average throughout. As this recovers, now you're laughing. Very similar scenario, I think, where we are now and where we've been since summer of 2021. Okay. Market is, market's a little toppy, you can tell, right? Market started looking toppy, so we say dollar cost average in, and good thing they did. Okay. And I think we should maintain that advice. And this is not for all funds, but if you're going into like a North American fund, I think that should be the advice until we get back to the 2019 levels. Okay, it doesn't mean I'm right, doesn't mean that's what's going to happen, but that's what I would be sharing with my clients. Okay, I think you need to be easing in until we get back to 2019 levels. Okay.
Mhm.
The money printing has stopped, right? They're not doing what they were doing in 2020. Okay. So we can argue that a lot of this move up wasn't because of any actual economic growth, productivity, etc., but just the result of a stimulus package being put into the market. So what I'm thinking is we got to give most of that back, and it's going to be painful. Okay. Any questions there, guys? I talked a lot there. I said a lot. I just want to make sure it was clear. You guys understand what I'm saying, and then we can just move on. Any questions? Anything not make sense? Okay. So yeah, SPY is a big one. I think bond yields are big, like bonds, like especially looking at the US bond or Canadian government bonds. So let's just look at that, okay? Because it is telling. Okay, so asset prices like real estate and stocks, especially tech stocks, they really like low interest environments, okay? So this is a chart of the 10-year yield going back to 1981, okay? 1981. Here is December 2020, and here we are now, okay? The first thing you want to get is that for the past 40 years, yields have been in a downtrend, okay? How do you know you're in a downtrend? You got these lower lows, lower highs, see? And constantly below the 200 period moving average, see that? We're just always below it, always below it. Okay, so what happens is people who understood what this meant in the 80s, 90s, 2000s, what they did is they would borrow money and they would buy assets, right? So they would take on debt and they would buy right, like real estate, right? They'd buy stocks, right? And they wouldn't really sell the assets. They would just keep rolling them over, refinancing, not selling, because they knew that yields would probably just continue this direction. Okay. Then what we had in 2020 was the yields really took a nosedive. Okay.
Mhm.
We hit the lowest we hit on a 10-year bond. So if you bought a 10-year bond in March 2020, a 10-year bond would pay you 0.33%. That's how much it pay you. If you buy a bond today, a 10-year bond, it's going to pay you 2.89%. Okay, that is a 800% change. 700%, 750.
And if you bought that bond, good luck selling it. Nobody wants it.
Yeah, nobody wants it. The price has gone down. Like you made shit interest, and now the price of that bond is lower than it was when you bought it. You bought the top, right? So you bought a bond here, you bought the top in bonds. Meaning, remember, there's a difference between price of a bond, yield of a bond. Okay, two different things. We're looking at yields, right? So as yields go down, prices go up, and vice versa. So what I find interesting is now given that the yields are back here, now we're back at 2018 levels. It could mean two things, okay? We have a generational buying opportunity for bonds, meaning we haven't had an opportunity to buy bonds at this price since 2018, 2011, and then go even further back, okay? Pretty cheap price. So it's either a generational buying opportunity for bonds and yields will continue to come down, or it's a trap, and I don't know yet. I'm not certain yet. Or it's a trap and yields are going to go higher. Now, do you guys remember when Stonebrook came and did a presentation, the private wealth guys?
Mhm.
Do you remember what I asked them? I said, hey, what would happen to your strategy if yields broke out and did this? Like, how would that impact your strategy? And they said, it's not going to impact it too much. We don't think that's going to happen because A, the economy can't afford it. And if it does happen, the Fed will come in and do something called yield curve control. Okay, that's what they said. What is yield curve control? Yield curve control is central bank printing to buy bonds and cap the yields. Right? Because if you create demand for bonds, whether it's real or not, whether you, sorry, just when you create demand for yields, whether it's with printed money or not, the price is going to catch a bid, right? And if price catches a bid, what does that mean for the price of bonds? Do bonds go up or down? You guys could turn off. You guys don't have to be on mute.
You said the price will go up.
Yeah, if there's a huge bid for the price of bonds, the price will go up, right? And what will that do to the yield?
Price goes
Down,
up,
pushes it
bring
down.
it down, bring it down.
So that's what yield curve control is. Okay.
And
Now,
is this common? Is this common or is this not done a lot?
Well, Japan's doing it right now.
Okay.
And we're going to look at a chart of Japan and their currency, and I'm going to show you what happens to a currency when they initiate yield curve control. Okay. But that's what they're saying. So what they're saying is, hey, we don't think the 10-year is going to go much higher because if they did, the Fed's going to do yield curve control. The economy can't handle it. Okay, fine, cool. We know that. Let's look at what happened to the Japanese yen when the central bank announced that they would do yield curve control. Okay. So I'm just going to Google. I'm going to show you something. Okay. So let's go to Google. And let's go Japan buys unlimited 10-year. April 20th, 2022, the Bank of Japan offered on Wednesday to buy an unlimited amount of 10-year Japanese government bonds at 0.25%. It's in its third move since February to defend its yield target. Okay. So let's get rid of the drawings. Let's find February on this chart. February is right here. Okay. So since February, when they announced this, the yen has lost 16% of its value against the US dollar. So it's lost 16% of its value against the US dollar in how many months? February, March, April, May, in 4 months. That is huge. Okay. Absolutely huge. So when a country initiates something called yield curve control, it weakens the currency. Okay, it's going to weaken the currency. What does that mean? That means if you have Japanese yen, if you have Japanese yen stocks, their value on a currency adjusted basis will go down. I don't know. Price of bonds will go up. Things get more expensive for the Japanese, right? Imports and all that stuff. So there's some repercussions there. Okay. Now the United States isn't doing that yet. They're not doing yield curve control. But we can see that the United States, and this is just measuring the US dollar, okay? We can see that the US dollar has been on a monstrous move higher since June 2008, since the great financial crisis. The US dollar is up approximately 45% against the main currencies. What are the main currencies?
Euro, pound, yen,
Yeah. Canadian dollar. It's called the
Canadian
loonie,
dollar,
Aussie loonie,
loonie.
right? So, et cetera, right? So what this means is that the US dollar has appreciated in the past 12 or so years, 45% against the majority of these currencies. Okay. So what I'm saying is the US dollar could head higher. You know, maybe we come back down to 2000, like this was the tech bubble, right? In the 2000s. Maybe we go back down, maybe we go back up to those levels. Maybe we don't, maybe we're capped here. Okay. But what I would watch out for is, okay, is the Federal Reserve giving hints of this yield curve control? And if they're giving hints of yield curve control, it might be a good time to take the opposite position and sell US dollars. Right? Or said another, or what else? Or you could, or buy risk assets. Okay, because if the US starts going on a printing spree to buy the bonds to keep them down, it will not only weaken the currency, the DXY, but it will send assets like Bitcoin and tech and all that stuff higher. Right? If you're going to destroy our currency, we're going to buy real assets. Does that make sense? If you're going to destroy our currency, we'll buy real assets. If you're going to strengthen our currency, maybe we'll sell real assets and we'll buy bonds to get the 3% yield. Make sense?
Yeah.
So that's what I think we got to watch out for. I think we got to pay attention to the bond market. I think we got to pay attention to the US dollar market. I think we got to pay attention to the Bitcoin market, or I think just Bitcoin. Okay. You know, look at this run, right? Like it's just, they're saying that Bitcoin is now like a barometer for risk. Okay. So if Bitcoin bottoms, you can expect other things to bottom as well. Okay. Like tech and the S&P and NASDAQ and all that. Okay. So this is a chart of Bitcoin. It's a logarithmic chart. Okay. So it looks a little bit different than your regular chart. This is a regular chart. Regular chart, arithmetic. Okay. And then log chart. So log chart, I like log chart because it measures the percentage gains and then it charts it that way. Arithmetic is just measuring a dollar movement. So it moves up a dollar, we'll plot it. Right? It goes down a dollar, we'll plot it. What this does is this will measure the percentage change from one period to the next. And then based on that percentage change, plot that. So the chart looks much different. Right? You can see that when you do a logarithmic chart, the move up doesn't look so crazy and the move down doesn't look so crazy. When you do an arithmetic chart, right, the move up looks insane and the move down looks insane. Move up looks insane, move down looks insane. Okay. So I think it's better to use the logarithmic chart in these circumstances. Going back to just our premise here of the 200 period moving average on the weekly time frame, we can see it's here. I just circled it. Okay, we can see it's about 20,000 and change, 21,000. That's where it takes us. Okay.
Can you zoom in a bit, Serge?
Yeah. You see the 200 period moving average though, right?
Yeah, I see it.
Okay. So that's where it is on the weekly. Here was our previous high in the 2018 run. Okay. And then here was the March 2020 bottom. Okay. So if we draw a Fibonacci from March 2020 bottom to the highs of November 2021, you can see again that 38% Fibonacci is perfectly aligned with that 200 period moving average. Okay. Technicians, right? So like market technicians Call that confluence. Okay, it's called a confluence factor when you have two technical things lining up. Okay, so you got a 38% retracement with a 200 period moving average lined up. If you go a little bit lower, you can see in this range that the 618 Fibonacci retracement takes us to about 11,000. It was also an area where market respected in the past. Right, so in 2018, it held as a ceiling and price came down. In 2019, held as a ceiling and price came down. And in 2020, held as a ceiling temporarily. Zoom into 2020, okay? Held as a ceiling temporarily, because you can see it broke, came down. People think it's going to top out here, it's going to go lower. And it didn't, it just broke through. Took off. We approached the previous high in 2018. Again, a little bit of uncertainty. You can tell by the candles. Right, see the uncertainty here at the, this is the 2018 high. Right, so market came up, people sold it, came down, uncertainty, right? There's, it's not going to break out. There's no way it's going past 20,000. And no, market said, yeah, we're going higher. Okay. So if you're Bitcoin, the time now isn't to go all in. It's time to ease into the trade. Dollar cost average, don't over leverage. Okay, there's a few things that tell us we're going to 20K. A few more things tell us that we go to 11K. We just went over those things.
Oh gosh.
Yeah. And you know, if you look at this, okay, some people will call that a double top. Okay, it's not clean. It's not a clean double top because slightly higher, like it's not equal. They should be equal. Okay.
Mm-hmm.
But if you use closing prices, even still, right? Like not the best. But if you classify this as double top, the target will be for this thing. I will show you the target. Okay. This is your neckline right here. This is your neckline. So what you do is you measure from the neckline to the top of the pattern. You measure it, you bring it down to the neckline, and it gives you an approximate target for the head and shoulders pattern. Okay. And
Okay.
that brings us to about 15K, 16K. Okay, so I'm not saying we're going there. I don't like the double top, it's not clean. But I wouldn't be surprised if something took us to 11K. I wouldn't be surprised if it took us to 16K. And I am expecting, I'm mostly expecting this 20,000 to be to hold for us to go higher. Right. So if you're thinking long term, maybe it's a time you can go all in. I would just be dollar cost averaging and look out for any news about yield curve control, money printing, war dissipating, and all that. Okay. That's Bitcoin. Any thoughts there, guys? Any remarks? Any questions?
So it sounds like Bitcoin, you said, is good time to ease in, but it will tread lower, most likely. Same with the S&P 500. Just sounds like Bitcoin has rose so much faster in the last few years. It's going to drop more than the S&P. That's what I'm hearing.
On a percentage basis, yeah, because if we let's put Bitcoin, let's just compare them, okay? Let's go side by side. So let's just measure the moves up since the March bottom, okay? So if you go the bottom in March to the top, you have a 1,500% gain in Bitcoin. 1,500% gain. Okay. And then if you go S&P, you have a 116% gain. Okay. If you measure the moves down, Bitcoin is down about 60% from its highs. Okay. S&P is down, we said what, 20%? 16? About almost 20% from its highs.
Got it.
So it looks like Bitcoin is still winning. Right? Because if you were to just ratio this, it's just, right? So Bitcoin is down 3 times more than the S&P 500. Okay. But it went up, right? So let's just write this down. Right? So it's down 3 times more than the S&P 500. You guys see how I got that? But it was also up more than 10 times. So what I gather from that is Bitcoin's actually stronger and more resilient, just measuring it against the S&P. That's how I see it, right? It's like, okay, S&P went up 116%, I got a 20% correction. Bitcoin was up 1,500%, I got a 60% correction. To me, Bitcoin's winning. Right now, if the S&P 500 maybe had like a 3% or a 5% downturn, then I would say, okay, maybe the S&P 500 is winning.
Yeah.
You get what I'm saying?
Yeah, I see that. A lot more downturn on Bitcoin, but way more upturn as well.
That's right.
Upside.
That's right. Okay. Now let's talk about Luna because that was big news.
Yeah, let's talk about Luna.
Yeah,
A lot of people are feeling the pain right now. And yeah, this went from one of the top look at the red. This went from one of the top 10 cryptocurrencies in market cap to I think what is it? Rank 220 now. It's in the 200s.
It has a ranking. Oh, I'm trying to find a good chart of it. Let me just give me 1 sec, guys.
Yeah, let's look at Luna and then Terra USD. They're stable, not so stable coin.
Okay, here's Terra. So this is a weekly time frame, okay? So was there any signs that we were going to get this move down? Any
I don't
signs
know.
whatsoever?
In the chart, I don't think so. In the news world, I didn't buy Luna. I didn't have any. I wasn't listening to it. So I don't know. I wasn't bullish on it. It kind of came to me as a surprise. But I'm sure if you were in that world, you'd see it coming. Serge is gonna pull up the receipts. Let's see.
You gotta pull up the receipts, man. April 14th. Okay. Those who jumped in the Terra Luna fanaticism this year or late last year are gonna feel some pain before any such glory will be granted.
How did you
Okay.
know, Serge? This is a bold call.
It's very bold. I didn't know it was gonna go to 0. Okay. I didn't think it was gonna like do that. It's not what I thought. I just thought this thing was overvalued, and anyone who bought in 2021, right? So, yeah, anyone who bought at the end of 2021 or this year was going to feel pain, meaning price would come back down maybe to these levels. Okay. Now, obviously, that's not what happened, right? But I saw the break. If you zoom in, had the same trend line that was drawn. So I didn't draw this trend line after the move down happened. I already had the trend line in place. Okay. So I didn't price didn't fall. And then I said, oh, let me find how this trend line would, no, it was already there. Okay. See?
Mm-hmm.
So the thing I saw, it's something called bearish divergence. Okay, I'll tell you what I saw, and then we'll talk about what actually happened. So I want to show you what I saw on the chart, and then we'll talk about what actually happened. So I saw something called bearish divergence. And what that means is price makes a higher high or lower low, but the momentum indicator does not converge, meaning momentum does not make higher high or lower low. Does that make sense?
Yeah. So instead of convergence,
There's a
you
divergence.
get divergence. So I see higher highs. Where are
So-
you looking at for momentum? Is you saying
Very
it's
good.
pulling back?
Yeah, so here's the high, and then here's the higher high.
Okay.
You guys agree on that?
Yep.
And then here's a high. Okay. High and higher high. The momentum, the divergence is confirmed by using a momentum indicator. I have two of them here. Okay. Awesome oscillator and relative strength index, RSI. RSI is the most telling one. So if I draw a circle here, you can see that this peak here aligns with this high here. You guys see that?
Mhm.
And then you can see that this peak here, which is a lower high, right? This peak is lower than this peak, is accompanied by a higher high in price.
Got it. And the RSI shows you what? What you said.
Show it, it does a calculation pretty much show you the rate in which price moves in a particular direction.
Got
The rate in which Luna got from 45 to 100 or whatever, right? Rate of change. Okay.
it.
Physics stuff that I don't really understand too much. Rate of change. It's in finance. So anyways, seeing that was already the clue. It's like, okay, this move up doesn't look real. If this move up was real, we would have had something called convergence, meaning the higher high would have been accompanied by a higher high in the RSI. So the RSI would have been up here. That would be
Okay.
convergence. Okay. So we had divergence. That was the first thing. And then I just drew a trend line, very simple, just connecting bottoms on the higher time frame. And I would zoom in to the lower time frame now. So now we're on the 4-hour time frame. And I was just looking at signs for this thing topping out. And what I saw was the 200 period moving average on the 4-hour time frame converging with my trend line. Remember the trend line that I drew? This is it, the orange line.
Yeah. And it looks like it's pulling down.
Yeah, you see the trend line?
Mhm.
This is on the weekly time frame. I just zoomed in. I saw this, saw the breaking of the trend line, and then I saw the break of the trend line, and then this 200 period moving average started to slope downwards. So if you look at April 14th, where was it? April 14th, I did it here. So I saw the trend line break. It gave me confidence to write my post. Pretty simple.
Got it. Got it. And you thought it was going to be like a decent correction, but instead, total crash. What actually caused this? What actually happened?
Yeah, so like it looks like from the sound of it that there was some big money, big whales taking advantage of the Luna's ecosystem. And like pretty much is like they were just taking on a bunch of debt and then buying more Luna and then like shorting that. Like it's super complicated. I don't know exactly what the mechanics are, but pretty much they shorted the shit out of the ecosystem. So everyone who had their Luna collateralized, right? So as Luna's going up, people are staking their Luna, right? People stake the Luna and then they can borrow from that and whatever, right? They keep it locked in and they earn interest and whatever, right? But as soon as you get price movement like this, all that loans, all the collateral, all that shit gets wiped out. And then you have this cascading effect of just selling and selling and selling. right? Kind of like just like a snowball. And it crashed. And now it's worth zero almost.
Is it zero or is it so close to zero?
It's fucking zero, man, because like they printed so much of the Terra, like they increased the supply of their Terra, like crazy. Like the amount of Terra that's out there now is like, or Luna is like, it's in the trillions.
What
And
was it
it's,
beforehand? Because I see like 6.5 trillion is what it is now. Can we
yeah,
find out what it was a couple
I'm
months
sure,
ago?
I'm sure we could Google it and it was much less. I could find out though.
Yeah,
It
let me
wasn't
do
in
a
the
quick Google.
trillions. I know for a fact because
Wasn't even in the trillions.
think
Okay.
about it. If it was in the trillions, multiply this price, multiply $85 by a trillion. There's no way
Yeah.
it was worth that,
No, 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 no.
right? So the supply of Luna was much lower.
So if we take, okay, but then the market cap did shrink. Let's see if we can find it. Try to find what the supply was a few months ago, and we'll
Let's
do
see.
some math here.
Uh, just call it. Let's do February 22. 1 million with 12 point. Okay, so Terra price gained 700 in February as 2.5 billion Luna tokens are removed.
Removed.
$21 Terra tokens destroyed. I don't know. Let's see, dude. Okay, UST supply is in the 13 million.
Yeah. So what's the correlation between Terra and UST? Because that's their stable coin, and
I
that is
don't.
not stable.
It's what they use to buy whatever. Like Luna had its own ecosystem, so you could use that stable coin to buy other coins in the Luna ecosystem, or trade it to some other stable coin or whatever. It was supposed to be a dollar for dollar, right? So you could buy even Bitcoin with it. But
Mhm.
the relationship, I'm not sure like what it means, right? Like the US, like the stable coin is supposed to be pegged 1 for 1, right? So
Yep.
one
To
dollar
the
would
US dollar.
be, yeah, one, call it Terra. I forget what it's called, Terra dollar. So it's a UST, right? UST.
Yeah, yeah. Terra USD. Why don't you pull up a chart of that? Because that went from being at a dollar to like 10 cents. So
Okay.
did they inflate it by 10 times? And I don't know what it's worth today. This is
It's worth
yesterday.
nothing.
So
It is
nothing.
worth 10 cents.
10 cents. Yeah, 10 cents.
1 Terra stablecoin is worth 10 cents. Okay. Worth nothing.
And there's still bullish news out there. I still see people saying, you know what, it's going to be repegged. I'm buying it. And I wonder, I'm thinking, what would be the
It's not going to
motivation there?
happen.
How difficult would that be to do? That
It's not
is
going to happen.
crazy.
Like, yeah, it's not going to happen, man. Like, too many people lost money. I just don't think, like, I don't see the same money that was going in before this happened. That same money isn't going to come in now.
It would have to be even more to get
Yeah.
back.
And you know what really bothers me about this? And this is what's happening in crypto. So when this happens in crypto, Bitcoin gets stronger. Okay. If we look at
Yeah.
Bitcoin dominance, okay, the Bitcoin dominance is gonna, looks like it's bottomed out here. Looks like it wants to creep higher. Why is Bitcoin dominance going up? People are
More
losing confidence
trust.
in the altcoins.
Yeah, more trust in Bitcoin. Whereas Bitcoin used to be what, 100% dominance because it was the first.
It's the market, man.
Yeah, it was 90%. So it came down and went up. And I'm thinking, what's the timeline there? When was it at that low? Um,
This is the 2018 bubble, the top.
So everyone was dumping into altcoins. That's when Ethereum took a big portion of the market share, right?
Correct.
Yeah.
But look, so market crashes, right? So in 2018, that's when the market topped out, right?
Mhm.
After that crash, look how hot, look at the Bitcoin dominance going up. Why did the Bitcoin dominance go up?
More trust in Bitcoin than anything else.
Yeah. People are saying, fuck these altcoins, they're too risky.
Mhm.
It doesn't mean the price of Bitcoin won't go down. Just means that the market cap that Bitcoin has is going up. That controls that Bitcoin's market cap becomes more dominant in the whole ecosystem when there's uncertainty, there's fear, and there's bear markets. Why?
Yeah.
Because these altcoins, I have a list here. All these altcoins are much easier to hack, disrupt than Bitcoin is. Not to say that can't happen to Bitcoin, but Bitcoin's been proven to be the most resilient.
Mhm.
Okay.
And
The
right now
SEC,
it's, oh,
sorry, one more thing.
go ahead.
SEC is not after Bitcoin. Okay. The SEC is after altcoins. Okay. So when something like this happens to Luna, which is an altcoin, technically it's supposed to be a security. This is like the SEC is getting wet in their pants because now they have a reason or an example to say, hey, look, altcoins aren't stable, stable coins aren't stable. We got to regulate the shit out of this. Okay. So that sentiment will probably be with us in the crypto market for a little bit longer. Okay.
Okay.
And yeah, I think for that reason, we'll see the Bitcoin dominance go up.
And when you talk about regulation from the SEC to ease volatility, what would that look like? What are they proposing? How would that work?
They have to, all these companies would have to register with the SEC, KYC, know your client rules would have to be implemented, all that stuff. Right. So these companies would have to hire lawyers to do the work to become legitimate securities.
Got it. Yeah.
Why do
It'll
they
be
need
harder to
that?
start up.
Yeah, it's a startup. Why? Because there's central management and control. Pre-miners, right? People that buy these coins before they're even released, right? So AVAX, right? Like something like AVAX. Okay. You have people buying the coins down here, prices you and I don't even have access to before anyone knows.
Before they have their ICO.
Correct. They pump the coin. When the coin gets up to here, they do a media blitz, right? People get in here, price goes up, media blitz happens. Obviously, the market tops out, and then boom. These people sell to these people, right? These people sell to these people.
And is that the whole point of the coin, or is this early investors just making their money and leaving?
Who knows, man? Hopefully, some of the early investors believe in the project long term and they're not selling here, right? But who knows? Maybe it's a shit coin. They know it's a shit coin. They're pumping it. They want to get out. They think it's going back to zero. Okay. And what's scary is you have people like Michael Novogratz, who are like notable people in the crypto ecosystem, right? Like billionaires, ex-Goldman Sachs guys. Right? This guy goes on YouTube, on Twitter. Show you guys. This guy goes on Twitter and he tells everyone that he has a Luna tattoo.
So this was a while ago.
January 4th, 2022.
Yeah. Is he
Where was the
regretting
price
that
of
tattoo?
Luna? Where was the price of Luna then? Not bad. So near the top, right here,
Got it. So you think he's still trying to hype it up? He might have
hyping it
been
up,
selling. We don't know.
hyping it up, hyping it up. Right? And then look at the news. So this is big, right? So this guy, he's big account, 400,000 followers, right? This guy knows people, right? He's on interviews with Neil deGrasse Tyson, right? Notable person.
Oh wow.
And now these guys are coming out and just hiding. Look at this. Novogratz goes silent on Twitter after collapse of a coin he promoted. Right? So what do you think that does for the trust in all these altcoins? Destroys it.
Mhm.
In the sector in general, right? Like the whole sector loses, like trust is lost in the whole sector. But you're not going to see, like you're going to see Bitcoin's down 5% today, right? Whereas a lot of these alternative coins are down 10%, 9%, 12%, 13%, 15%. Okay.
Mhm.
So we're going to see Bitcoin dominance continue to rise. And I just think it's interesting. Like I just, for me, when I see guys like this promote a coin, I'm like, okay, the chance that these coins can go to zero are super low. These guys are billionaires. They have an established investor pool. They got companies, publicly traded companies, right? They're accountable to other shareholders. Like they're not going to invest in stuff that goes to zero. Okay. This motherfucker did. And a lot of people bought Luna because of him.
Wow.
This guy's got a publicly traded crypto company. Want to see how his company's doing?
Yeah. So you're saying publicly traded crypto company, like investment company? What do you mean by that?
Yeah, like they do, like think of like an investment bank, but in the crypto world.
So do his funds have Luna in them?
Probably. We could check.
Okay.
We could check.
Maybe he believed it. If his funds don't have it, then he didn't really believe it,
That's right. Or he
right?
sold it
If
already.
they sold it in the fund, yeah.
Right. So this is his stock. It's probably going to come back down to here. And it could even go to zero. Okay. So things to watch from, things to stay away from, maybe. There's risks out there, right? I'd be careful. Maybe you'll have clients talking about investing in crypto companies. Okay. The main thing I think I would communicate to a client if they're investing in a crypto company is that investing in a crypto company is like investing in a leveraged Bitcoin position. It's like buying Bitcoin with leverage.
Hmm.
Okay. So obviously something to watch out for.
Yeah, you're going to be careful, and your timing is going to be more important too.
Exactly. Exactly. How are we doing on time, guys? It's 12. I think if you guys have anything else we need to chat about, and you guys things you want to discuss, I think now is a good time. We can go for another. I got like another 5-10 minutes. If not, I think I'm good.
I'll say two more things we'll chat about quickly. One, I'm not too sure, but I saw a headline that Elon Musk purchase of Twitter might not go through, and I'm like confused. I thought it was a done deal. They were just going through the motion, so I'm not too sure about that. But I didn't read the whole article, just headline. And then Pierre Polyev, I hope I'm saying his name right.
Yeah.
Here in Canada is invested in Bitcoin, speaks about cryptocurrency quite a bit, and he's making the difference. He's making it clear that there's a difference between cryptocurrencies in the free market and like a central bank digital currency.
Yeah.
And he's very against a central bank digital currency. So I find that really interesting. I think people kind of digital currency, whatever. That's not really the case.
Yeah. Yeah.
What do you have to say about that, Serge?
Well, I think let's talk about Twitter.
Yeah.
Listen, there's gonna be a lot of noise around Twitter, right? I think Twitter's awesome. It's my favorite social media platform.
Yeah, you on? I don't have a Twitter account. Are you on Twitter more than Facebook? Because I know you're on Facebook a lot.
I'm on Facebook because I post a lot, but I'm on Twitter to learn a lot. Like a lot of the ideas I get, I shouldn't say a lot because a lot of it's bullshit. Some of the ideas I get are from Twitter. I find people are more insightful. Like you'll find more insightful content on Twitter than you will on Facebook. And yeah, I think Twitter, you can just get closer to like smarter, better people on Twitter than you can on Facebook. Facebook's more like family and friends, share with them what you know type of thing, right?
Mhm.
I think it's really cool. I think just seeing, if you look at Twitter, if you look at this momentum, that's why I love technicals, right? Because it just shows you what you don't see when you just read newspaper articles and listen to headlines. But you can see that the move up on that Elon Musk news was not accompanied by any significant volume momentum. See, it's tiny.
Got it.
Okay. So what that's telling me is we are probably en route to a move lower. I have a rectangular box to just highlight potential support levels.
Yeah.
I would think this is going lower, and then maybe we're going to hear some positive news, and then it'll be time for Twitter to go higher.
Got it. So the Elon lovers came out to buy Twitter. The volume didn't really have a blip, but the RSI did, but not as high as in the past.
Exactly.
That's what I'm seeing there.
Exactly. And then you look at Tesla, like Tesla is weak right now, right? So that's why when Elon's talking all this stuff, I just look at his Tesla stock and I'm just like, look at this.
He was selling at the top. I think he knows.
Look at this.
Can I make a bold prediction?
I did.
Yeah.
January 19th, when price was at 1030. I was already watching this stuff, guys. Tesla looks toppy. Okay.
It'll climb back up. I don't think it's gonna fall, and I'll tell you why.
Yeah.
I think he's actually trying to acquire Twitter.
Mm-hmm.
I think he's trying, like, I think his most recent comment is most evident of kind of chess game he's playing. He who controls the teleprompter is the president of the United States right now. So
True.
he understands the importance of leveling the platform playing field, right? He understands that, hey, the truth is much like a lion. You kind of just let it go, and whatever gets in its way, it'll devour, right? So in this case, I don't think he's actually trying to purchase Twitter. He's actually trying to expose the, I guess, the monopoly, I guess, on the information coming out, right? Because when you look at it, hand-to-hand comparison, no one batted an eye when Bezos bought Washington Journal, right? The Washington. Yeah. In fact, it was a good thing, right? Mm-hmm. And now another billionaire is trying to buy another media company, and all of a sudden,
oh my gosh,
right? Yeah. So when you look at it, he's just trying to expose it. And we're, I guess, to touch on Matthew's previous point there as to why the deal might not fall through is because he's put the purchase on pause because what he's evaluating the company on is based on Twitter's information.
The amount of bots.
Yeah, the amount of bots. And Twitter's saying they have about approximately 5%. Now the way he's evaluated at it, it's about 20%. Regardless, if you want to look at it, both numbers kind of devalue the company's worth, and he should be buying it at a discount.
Yeah.
Now, will he buy it at a discount, or will other things come up? Like, I don't know if you follow Project Veritas. Now, all of a sudden, there's a lot of employees caught on camera making fun of people with autism that are higher ups in Twitter, all right? So, I don't know. I don't know if the deal's actually going to go down. I think this is more of a way to weaken a different type of infrastructure to save his own.
I think it's good for Twitter. But I think a lot of it also is noise to distract us from this Tesla collapsing.
Maybe. And
because I was at a dinner on Friday, 2 Fridays ago, and I said, guys, I think Tesla's going to collapse. I did. Look, April 27th. So I went to dinner around this time. Okay. It's trading at 800 and something. Okay. So it was up here. And I told these guys, guys, Tesla just looks a little overvalued. Like, look how far it's come. I think it's going to fall. I didn't tell them that I look at charts and I know I look at all this stuff. Okay. And right away, it's kind of like their immediate reaction is like, oh, Tesla can't fall. Right. And it just obviously could, right? Like, and when the market, I think when there's a general sense that something can't fall, like Bitcoin, for example, there's like when
Yeah.
Bitcoin was at like 50,000, I was even like, oh, Bitcoin can't fall.
I made some
'Cause
mistakes with Bitcoin, and like there's a culture around investing now, like retail investors,
Yes.
to hold on for dear life and never sell. Whether
Yes.
it's a stock and people jump into GameStop and get all hyped up,
Yes.
Bitcoin, they get very emotional. It's like I can't let my position go,
Yes.
and they hold, and they can miss the opportunity to make their money back and then some, and
Yes.
they watch it fall, and then they're like, well, I'm not going to sell now.
Yes.
And buying and selling is how you make money, not just buying. But
Yeah,
people
and
have the
there's a
faith.
bunch of factors, right? Like there's a bunch of factors. Like I didn't buy Bitcoin at 50,000, right? Like even though I didn't want to sell my Bitcoin at 50,000, I wasn't buying it at that price. Okay. I want to show you one more thing because I just think it's golden. Okay.
Pull
If
it
I
up.
measure the Fibonacci from the bottom of March 2020 to the top of Tesla, look where the 200 weekly lines up with again. Which number?
Oh, yeah. Back
My-
where it was.
My question becomes this though.
Yes.
Musk, okay, first of all, Elon Musk is a brain in itself, okay?
Yeah.
But that kind of money, he has advisors that for sure have caught this. Now,
Yes.
where I'm coming from is he's publicly called out, investors who are holding what's it called, short on his
Yeah,
his
like
stock.
Bill Gates.
Billy, yeah.
Right.
Billy Gates.
Yeah.
Opinion, every move he does right now is to kind of keep his company from coming down. Like, you know what I mean?
Yeah.
He's playing a whole different
But
chess.
what could he do?
At this
Like,
point,
I don't think he can do anything to prop it up more and more.
yeah, well, put it this way, it's not himself that he's trying to prop, right? He's trying to show other people now why you shouldn't prop people like Bill Gates and various other organizations and people that don't hold your best interests at heart, right?
Yeah. Yeah,
So-
but
Company that way, right?
I don't think I get it, and I think it's wise what he's doing, and it's true. But I just don't think like he and his team have the resources to defend a stock if a bunch of big institutions are short. Like it's super hard. It's just super hard. Because look, dude, like the Tesla, look at the Tesla stock.
Yeah, but if you take those resources away for other people, you're leveling the playing field. And we know Twitter is a very
But there's no, but what resources, dude? I look at this chart. I'm a regular dude. I look at this chart. Tesla's a short.
I agree. I'm not saying that, but the
Yeah.
people short, right? And they hold the communication, the lines of communication. So that he who controls the teleprompter controls the masses, right? So if
Yeah,
you
100%.
filter now in front of the teleprompter and everyone sees for what it is, you allow the public to see it. So that in itself might keep his company from shorting, keeps people honest when people can see what's going on behind the scenes.
I think the macro's too big. Like I get what you're saying. It's like maybe if people see that the people who are betting against this company are bad actors, then we should not short this company and we should just buy the stock.
Right. And prop up something we actually believe in. So
Yeah. I think it just takes too much to prop something like this up is what I'm saying. Like it would be insane.
Okay. I think the opposite, because if you look at what happened with what's that company, GameStop, was it a couple of years ago?
Yeah.
Right? We won. If you think about it, we won. So, and by a large margin too. So
yeah, dude. But GameStop didn't do this. Like, look at the percentage gain since 2011, dude.
That's true. It didn't do that.
It didn't go up like 39, 40,000%. And then they started playing you know what I mean? Like, I just think a lot of this just needs to come down. And look, if you actually zoom out, like a move to where was the 200? Where was that week?
Growth is kind of insane.
Yeah, if you just zoom out, like that move to 380 is nothing.
Right, it's a cliff.
It's a little thing. That's what I'm saying. It's like to prop it up at these prices is just going to be hard. If the short sellers come in at 350, 360, well, now it's a lot more easier to defend, in my opinion, right?
Mhm.
You got a smaller stock, like the market cap has come down significantly, right?
Yeah, like I
I'm
wouldn't
not
buy
betting against Tesla.
right
Listen,
now.
I like Elon and I like the cars. I want to buy a Tesla. I just
don't.
look at a chart and I don't have any emotion about it. Like I see what I see and it tells me what it tells me. And
I hear you, and I don't think, like, for example, and I want to get into more deeper what I'm thinking what's going to happen with everything, like in general. I think prices will come down until around November, but they won't come crashing down, is what I'm saying. Not like
yeah,
they did, right? Because I don't know. I think the more we move forward, a lot of changes are happening, like drastic changes that kind of show that, the people that are kind of running the show right now won't be making the rules tomorrow.
exactly. Right? Exactly. Which is good.
Yeah. So like you say, it will come down. Like, I don't think it'll come down. I don't think it'll come down that hard, especially Tesla.
Yeah,
How
well,
there's
it
gonna
may
be a
not come
huge
down hard. It could go
crash.
like this, dude. Like it can go like this and then back up and then like this, back up and then like this. And then all of a sudden you're at your 200 period moving average.
Yeah, I think
Yeah.
something like that, but I don't think it's gonna, like, Luna on us.
Yeah, I don't think it's gonna Luna either. Hell no, hell no, hell no.
I don't
Like
think that's what Serge is saying. No. Serge is
hell
talking
no,
about a
hell
small
no.
move down.
I
But
misunderstood.
if you're looking to buy Tesla, like
Wait,
you wouldn't buy it right now, is what you're
Just
saying.
wait.
Yeah,
wait.
Like
wait.
for what my rule is, try to buy close to the average price. Like try not to buy when you're stretched away from these prices, right? Like that's
Mhm.
it.
Do you
Doesn't
see it
mean
for months?
doesn't mean look, it's stretched away here and it kept going. That could happen. But then look what happened years later. You
Yeah.
had a
I
better
know.
opportunity to buy again.
Hmm.
You could have bought here and you could do good, but guess what? Better opportunities to buy again in the future. And then even up here, look, could have bought up here, stretched away, and then look, another opportunity to buy closer, right? So that's all I'm saying. Like this looks overbought. This has little to no momentum on this move up, right? You got trend line breaks all over the place. 200 period moving averages there. Wait till you get close to there.
I think
And start.
Elon's taking care of his shareholders. I don't see a lot of like periods of just big dips without a recovery. And
Yeah.
I know like the way it seems to be, I'm not an expert on the company, but they kind of time the news and they'll announce a car and hype people up, even if it's not going to come out for 2 or 3 years.
Yeah.
So I think that plays into this. I think they're paying attention. But Demetrius, you're talking about the deal not going through. I just heard that news and I haven't been following too closely, and I don't know what the terms of the deal are. Did Elon have full intentions of buying Twitter, or did he just want to have the news out there? I have no idea. I thought he was going to start a few months ago.
Yeah.
Trump was talking about Truth Social, and his stock had hit, and I think one or two people in Congress were buying it, and a lot of people that were like diehard fans of him were talking about his social media company being free speech, but a lot of people were against it. Elon is a bit bigger, a little bit less maybe polarizing. So I thought he was going to start his own company. Buying Twitter might be a lot easier, but maybe that's not even the game plan. I don't know.
That's where I agree. Someone like him, right? He could easily start his own social media company and gather the momentum to kind of bring the people in by masses to do it, right? He's like a Trump where his people to his brand. So buying Twitter to me always was red flag, right? And not that I don't want him to buy Twitter. It's not about that. It's more so what's his true intentions when he makes this move, right? Because like when we think about it, these people don't just make moves for the heck of making moves. He was taking polls months before he even made the move to buy Twitter, and no one in Twitter saw those moves, right? Like those polls, no one kind of figured it. Now, when he first announced, okay, I'm going to buy Twitter, and he makes his offer, until now, we've learned so much about the inner workings of Twitter. What are we going to learn over the next few weeks? My question becomes, is he going to retract his offer and put in a substantially lower offer? If he does that, what are the repercussions to the market? like there's a lot of questions that go into this, and including, is it even worth it? Like, depending what we find out, will he even put in a, or will he now have exposed Twitter and social media to the point where, hey, look, people are flocking over to, alternative social medias where it's not so, I guess the ratio is not so overpopulated between bots and humans, right?
Yeah, and I had an idea right before Truth Social was announced. I thought a Joe Rogan and Elon Musk might have come out with a platform that was possibly privately owned, pay to use instead of all the advertisements and selling data, a couple dollars a month. And to get rid of the bots, like if you use a government issue ID to make an account and everyone gets one account and maybe a business account, you'll have accountability, and then people won't say crazy stuff because their name's attached to it. It's like you going outside and yelling it instead of hiding behind a screen with a fake name. So I wanted to see something with those aspects. And Twitter, I don't know how much the company's actually worth. I don't know tech. I don't know the algorithm and stuff like that. But I think he'd be able to spend less money starting his own platform and then just marketing it, even though Twitter already has the users. But if you're going to have to start asking people to pay, you're going to lose some people, right? You're going to lose a few. People are too used to everything being free and just having the data being sold.
Yeah, it's got to change.
I agree.
I don't know. I haven't looked at the deal. I don't know if he can back out, if there's a certain thing that Twitter would have to do to make him have the ability to break the deal. I don't know.
Evaluated at the company at is clearly not being negotiated. Like there's no agreements on it. So Twitter's claiming 5%, but then through Elon's I guess his investigation with his team, they find that it's closer to 40%, right?
That's crazy.
Sorry, closer to 20%. And it's like when you have these kind of numbers now, like for example, 20% and only 80% is actual humans, right?
Yeah.
That devalues the company. It's not worth of what you're paying for it if 20% of the company is artificial.
It devalues actually all of social media in a way.
Right, because now what does that do to Facebook? What does that do to Instagram and yada, 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 so on and so forth, right? And then you have all these, I guess, what are they called? The fad setters or the trend setters, or what are they called? The social media personalities, right? How much are
influencers?
Influencers, yes, exactly. How much are they paid to now, I guess, parrot what they, what the mainstream media, who are the highest bidder, which is, I guess, advertisers, people who are willing to advertise, right? Like Pfizer's been doing a lot of advertising. I think all my news I've been watching for the last 2 years has been brought to me by Pfizer, right? Or Moderna. One of the two.
They don't advertise, they sponsor advertisers for less liability, right?
Yeah, which is another way a fancy way of saying advertising and advertising. Right? So it's like, I don't know. In my opinion, it's, again, people are willing to do a lot of things for money. I don't think that's right. But again, if you make it now where, and like Matt was saying, give it a small fee, like a cup of coffee for a month, people will, you'd be shocked. I'd rather be on there for more than a cup of coffee, knowing that the people I interact with are actually people.
Mm-hmm. And we'll lose some people.
Look, Twitter, real quick.
And that's fine.
Twitter could link every account to Lightning Network. Boom.
Okay, hold on.
So
what is Lightning Network? I don't know.
So Lightning Network is
like a central AI, if you think about
it. No, it's a payment technology built on the Bitcoin network.
Oh,
so it's the most cutting edge payment technology apparently that's ever been created.
Facebook on that big one. What is it called? Facebook bucks?
Yeah. No, this is using Bitcoin. So what this says is, hey, everyone have a Lightning wallet, and you can spend Satoshis to view content, create your account, like what you guys are saying, right? Like create some scarcity or make it harder for bots to just create accounts and devalue it, right? So Jack Dorsey, CEO or ex-CEO of Twitter, is working on this with the Cash App. So don't be surprised if something like this comes out.
Got it. And he
For
uses Bitcoin because Elon
Yeah, it's Bitcoin.
had said he seemed to be behind Bitcoin. Then he said it was bad for the environment, and he keeps promoting these smaller altcoins. And I know he has Bitcoin. I know that he likes it, but he's not vocal about that. So this could be a big move.
It's a huge move. They're talking about it because Musk, Dorsey, Peter Thiel, those guys have good experience building payment apps, and they have a good understanding of how to intertwine that stuff with technology, like the economics of all that with tech, right?
God,
Tesla has
exactly.
holdings worth 1.3 billion, so it's probably worth half of that now. So yeah, they have Bitcoin. Right?
Got it.
So remember, when you go on Twitter, if you put hashtag Bitcoin, like an actual Bitcoin symbol pops up.
Oh,
Okay,
really?
so I really do think Bitcoin, Twitter will become a Bitcoin company.
Okay, because Jack Dorsey runs Square
Yeah,
since he's not CEO of Twitter anymore, and they embraced cryptocurrency, right?
yeah.
Got it. Got it. It's
Yeah.
good to know this. That's good.
Specifically Bitcoin. Jack Dorsey's really huge on Bitcoin. He doesn't really care too much about the altcoins.
Got it.
Guys, I gotta run. I gotta eat
All
this
right.
pasta.
This was cool. You eat your pasta, Serge. Have some cereal. All right. This was interesting. This was a really thoughtful session. So I enjoyed this.
Awesome stuff, guys. Yeah, me too. It was fun.
Yeah, I look forward to the next one, guys. Honestly, every week is great.
Yeah, I
Yeah.
think it's good, man. I think if we can take this information and share it with people and talk about it, use it as anchors to actually have conversations with people. I think it's really good.
Well, I usually do. I make a habit of it. And you can stop recording, Serge. We'll put this out. I think this is fun. But we might start doing